Hi, everybody. After reading my latest post, reader Howdy Kaiser said, what would the value of my Las Vegas home be if there hadn't been a real estate bubble and bust? So let's look at that now. So to get up there, get to the charts, we're going to start by looking at my charts. Let's click on the Case-Shiller charts and then scroll down to the inflation-adjusted charts. Here we go. And let's just add Las Vegas and Phoenix. Click apply. Okay. So this is a bubble. Let's go back a little bit in time. Okay, good. So we can see that for Phoenix, here's a kind of a pretty straight there for a long time. There was a kind of a boom going on in Phoenix homes, real estate values. The purple line is Las Vegas. So what I'm going to do is just extrapolate out. What if that line went all the way out? Where would it be today? Where would it be today? And also with Phoenix. Now, this is kind of a fun thing. This isn't realistic because price trends don't last that long. In fact, these are really long price trends. They're over 5 years that they're growing at pretty much the same rate. But that's atypical. But nevertheless, this is a fun project just to see what would prices be like today. So let's extrapolate the purple line, which is Las Vegas. So their trend from the late 90s and the early 2000s all the way out. And you can see that it is a lot higher today compared to what it was in 2000. So instead of going up like 4 or 5%, it's up over 20%. So that's a big increase in value if there had never been a real estate boom or bust in Vegas. So let's look at Phoenix. Extrapolate the pink line all the way out. And you can see it's much higher if we had stayed on that same trend from the late 90s into the early 2000s. And prices have gone up 50% more than they would have otherwise. So that's a big change if prices, that's 50% more than they were in 2000 versus 10%. So you can see that home prices today would be better in both Las Vegas and Phoenix if there had never been a real estate bubble, at least on our project we're looking at here. But let's look at something else which is pretty interesting. Let's just look at Phoenix and Dallas. So basically, Phoenix and Dallas are at pretty much the same place in home prices compared to where they were in the year 2000, January 2000. But Phoenix took this wild trip, which ended up wiping out the life savings or wiping out the net worth of a lot of people during the crash. If you bought in here, oh man, that hurt. But Dallas didn't have that. And so what's happened to the economy now is the home prices now in Phoenix and Dallas have appreciated about the same degree since January 2000, but the economy in Dallas has been doing spectacular for years, and Phoenix has been fine. In Texas, it's illegal to have an interest-only loan. In Texas, it's illegal to have a negative AM loan, a negative amortization loan, where actually the amount you owe goes up if you make them an payment. They were called option arms. That was a common name for them. That was illegal in Texas. They had a thing where on refis, you could only refi up to 80% of the value of the home. So that prevented a lot of cash out of it, which basically minimized the bust because people still had 20% equity. Where if you refied and ended up with zero equity or 5%, when the prices fell, then you're underwater and some of those people would walk away. So they did much better by having more regulations in Texas, which protected the consumer really. Although the mortgage companies thought that was crazy because that meant they could do less business, fewer mortgages. It wasn't good for the mortgage companies, so to speak, but it was a lot better for the consumers. Great. I hope you find that interesting. Hope this hasn't gone too long. Leave any comments below, and thanks, Al, for the suggestion. Excellent. Thank you.